This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Financial stocks have become the year's top performing sector as rotation away from mega caps intensifies. The group, which includes banks, insurers, and securities firms, is now up 15% in 2024. It just pulled ahead of communications, which includes Nasdaq giants like Alphabet and Meta platforms, according to TradeStation data. It's the latest milestone in a process of change that started earlier in the month. At least two things seem to be happening. First, investors are embracing stocks that could benefit from lower interest rates. Second, they're normalizing positions after historic concentration in a handful of giant companies like NVDA. Other groups that are starting to lead include real estate investment trusts, home builders, and biotechnology. The Russell 2000 Small Cap Index has also surged to life and now trails the Nasdaq 100 by just 1.5 percentage points on a year-to-date basis. Last week provided more evidence of the shift. More than 300 members of the S&P 500 rose between Friday, July 19th and Friday, July 26th, but the broader index still lost almost 1% of its value. Megacap weakness was the culprit. Did you know that of the 10 largest companies by market capitalization, only a single one had a positive week? Interestingly, it was Berkshire Hathaway, a financial stock. According to TradeStation data, some of the new gainers are apparent turnaround plays. That might also suggest investors are hunting for value instead of counting on big growth stories like AI. Mohawk Industries, for example, had its biggest weekly advance since the pandemic after margin improvement pushed earnings and guidance past forecasts. The maker of flooring hasn't made a new record high in almost 7 years. Next, 3M is one of only two members of the Dow Jones Industrial Average to fall in the past decade. But last week it had its biggest gain in half a century. Margin improvement drove the profit beat as the industrial conglomerate settled litigation and raised prices. Third was Bristol Myers Squibb. The 137-year-old drug maker lost half its value between late 2022 and June. But last week it had its biggest weekly gain since Gerald Ford was in the White House. Earnings surprised to the upside, and management cited growth potential from a new portfolio of products, including cancer treatment Opdivo. Economic data was potentially favorable for gains in the stock market. Gross domestic product expanded by 2.8% between April and June, well above the 2% forecast that could support corporate profits. Inflation readings matched projections, bolstering expectations that the Federal Reserve will cut interest rates in September. The labor market also showed signs of moderating without collapsing. Initial jobless claims were lower than expected, and continuing claims eased. That may represent an end to some weakening that began in May. Separately, personal income missed estimates and increased at its slowest pace since October. That may suggest wage pressures have eased. S&P Global Market Intelligence economist Chris Williamson cited a Goldilocks scenario at the start of the third quarter, with the economy growing at a robust pace while inflation moderates. He added that output across manufacturing and services is expanding at the strongest rate for over 2 years. And now let's chart the market. While the S&P 500 has declined for 2 straight weeks, some chart watchers may see potential for a recovery. First, the index tested and bounced at a bullish price gap from June 12, which came after the consumer price index was unexpectedly unchanged. At the time, the news spurred confidence that inflation was easing. The S&P 500 also held the 50-day moving average, suggesting its intermediate-term trend as still bullish. Next, the stochastic slow oscillator is dipped to an oversold condition. The last time that happened, a rebound followed. Price action on Thursday and Friday could have additional significance. An inverted hammer could first signal its short-term drop was ending. Then an inside day could reflect stabilization. Lower U.S. Treasury yields could also be consistent with expectations of lower interest rates. Those could be especially important with the Fed meeting in 2 days. So we'll now turn to the coming week, which is packed with important news and earnings. Today is the quietest session, with McDonald's and ON Semiconductor issuing results. Tomorrow morning brings consumer confidence and earnings from companies like Pfizer, JetBlue, PayPal, and Procter & Gamble. Microsoft Advanced Micro Devices, and Arista Networks follow in the post-market. ADP's private sector payrolls report as on Wednesday morning. The Fed issues its monetary policy statement at 2 o'clock in the afternoon, Eastern Time. Chairman Jerome Powell's press conference is 30 minutes later. Meta Platforms reports after the closing bell. Thursday features initial jobless claims, unit labor costs, and the Institute for Supply Management's Manufacturing Index. Apple and Amazon.com provide the big earnings. Friday brings the big jobs report, with non-farm payrolls, unemployment, and wages. Chevron and ExxonMobil report quarterly numbers. Thanks for watching. Please visit tradestation.com for more.